Welcome back to Strongman Personal Finance, everybody. We got a doozy of a video here. The IRS cleaned out my savings by CCG, Xi Jinping. So this chick right here is married, apparently, according to her finger. But she's also self-employed. That means she runs her own business. She is a strong, independent business lady who don't need no man. But apparently, despite being this strong, independent woman, I don't even know if she acts like that, and despite being highly educated, she used to be a lawyer, I believe, something like that, she actually wound out getting absolutely clapped by the IRS, by the government, because she failed to properly tax plan. And me, Christopher Bell, as a certified public accountant, am disgusted by what I heard in this video clip. So we're going to listen to CCZ explain her situation, why she got a massive tax bill as a self-employed person, and I'm going to tell you how to prevent that, because if you're self-employed, you may think you're smart. You may think that you're a business person and taxes are just so easy, bro. But you actually need an accountant. I'm going to show you exactly how self-employment income is taxed on a very simple level. So let's go ahead and listen.
Kind of is what leads us to where I am today. One of the things I had been looking forward to about self-employment was actually being in a lower tax bracket, right? I think as a lawyer, I was in a pretty high tax bracket, and I was like, all right, for a little while, I'll be making less. That's fine, because I'll also be in a lower tax bracket. Like, it would be really awesome to not have as much taken away in taxes every year.
Okay, let's stop right here. Number one, yes, eventually, if you move into a higher tax bracket, the income that falls within that bracket, the taxable income, is taxed at that tax rate. So if you make $1 million a year, there's a certain band of income that's taxed at 37, and a certain band of income that's taxed at this and that, all the way down to 10%. Yes, if you make more money, you get in a higher tax bracket. But it is always better to make more money in all circumstances. Maybe there's like one circumstance in a billion where it's not better to make more money. But you should not be celebrating being in a lower tax bracket. What that means is you're making less money and your total quality of life is worse. But okay, man, I don't want to get a raise because I'll move into the next tax bracket. Oh, okay, I'll take your raise then, clown.
That is what I thought. So I looked at my federal tax bracket that I would be in with my new self-employment income, and I added a little bit to that for state taxes, and then I just only saved that. I only saved that amount from how much I made every month, and I was like, okay, great. It wasn't until my accountant gave me my estimated taxes due that I realized I had omitted this little thing, and by little I mean not very little, because it's actually 15.3%, called self-employment taxes.
So this person, businesswoman, she leaves her full-time job, whatever, that's fine, and she starts her own business, and then apparently her accountant, I don't know, did the accountant prepare her taxes first and then tell her she owed self-employment tax? I don't freaking know. But she quits her job, and she thinks that she omitted something that she wasn't paying before. What is self-employment tax? Very simply, it's Social Security and Medicare. That's it. And I got a little secret for you. If you're an employee, you do pay that tax. You pay 6.2% Social Security and 1.45% Medicare. You, as the employee, pay that. You'll see that on your pay stub. Your employer also pays 6.2% and pays 1.45%. So technically, and I'm not saying the business would do this, but technically, the business is paying expenses that you're not seeing, payroll taxes that you're not seeing. But if you add that up, it totals up to 15.3%, except you pay half of it and your employer pays half of it. But if you run your own business, who's the employer? Oh, that's right. You're the employer. So you pay both the employer portion and the employee portion of self-employment tax. Isn't Social Security and Medicare just awesome? Let's continue.
And this is one thing that I actually don't see talked a lot about when people encourage you to quit your job and start your own business or become an entrepreneur, right? Or at least I haven't really heard legitimate detailed discussion about the self-employment tax. I'm sure it's out there. I think, again, one of my issues is that I am scared of money, so I didn't go out of my way trying to investigate all the details of what taxes would be like now that I work for myself. That's totally on me. But I'm now relaying this to you in case you are also someone who has been thinking about becoming self-employed, but don't really know the potential downsides of doing so. And one of the downsides is this self-employment tax, 15.3%. And it's something I didn't really account for because I really just looked at my income. I was used to only paying income taxes.
False. You also paid half of the self-employment tax as an employee, and your corporation, which could have theoretically paid you more, paid the other half. So you definitely paid it.
And I did have some self-employment taxes from the year I quit, where I kind of had like hybrid income, right? I had both W-2 income and self-employment income, but I think my self-employment income just wasn't that high that year because of it being hybrid, that the amount I paid in taxes in self-employment that year was much lower than what I got hit with for this year.
All right, so we basically got it. So she got absolutely clapped by self-employment tax. Now, let me basically explain in very simple detail. Let's say you're just a solo person who starts their own business. And no, you don't need an LLC to start a business, okay? It's probably a good idea to get one, but you don't need one. If you go out there and you provide services, goods or services, on your own, you're a business, okay? Unless you're a hobby, that's another story. How does self-employment tax work? Well, you have federal taxes, which is just standard federal taxes. You may potentially have state taxes. And then on top of that, you have self-employment tax, which is Social Security and Medicare. That's to fund our big, delicious government programs. What do you pay self-employment tax on? Well, if you're a simple business, one strong man like me, you pay self-employment tax on your profit. And I made this cool little tool here for you, okay? This is very rough estimates. You should definitely consult a CPA. Oh, like me, I'm actually a certified public accountant. I do people's taxes, but that's neither here nor there. Let's go ahead and make up a business here. Let's say that I'm self-employed and that's all I do. I don't have a full-time job because that complicates things a little bit when it comes to the Social Security portion. My revenue on my business, this is just sales, is $80,000. My expenses are $40,000. So my profit is $40,000. You only pay self-employment tax on your profit. The tax due is calculated based on your profit and then a couple other steps. It ain't based on your revenue. So if somebody hands you a check for your self-employment for $80,000 for a year, and you also have business expenses that are deductible, it's only based off the profit. So you kind of have to guess what your profit is because you have to make quarterly tax payments. That's another thing we're not going to cover right now. But you got to kind of guess what your profit's going to be for a year, and your CPA can actually do tax planning for you. Like they can kind of say, okay, this is your profit, this blah, 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 blah. Okay, so now we know what our profit is. We made $40,000 of profit for the year after our ordinary and necessary business expenses. Now, how is the self-employment tax calculated? First, we start with your business profit, which is the $40,000 we calculated. Then you multiply it by 0.235%. This is the deductible portion of self-employment tax. You reduce your business profit by multiply it by 0.9235. Now, if you take 1 minus 0.062 minus 1 minus 0.062 minus 0.0145, that gives you 0.235, which is basically 1 minus half the self-employment tax. This is the amount that you actually calculate the Social Security and Medicare tax on. That's just how it is, okay? So, we take the profit and we multiply it by 0.9235. That leaves us $36,940. Social Security tax is 12.4% of this number. 12.4% of $36,940 is $4,851. Social Security, baby. Medicare is 2.9%, which is a total of $1,071. If you add up 12.4%, this number, and 0.029, you get 15.3%. That's what she talks about when she talks about Social Security and Medicare, okay? So your total self-employment tax is the sum total of the Social Security and Medicare, which is derived from 92.35% of your business profit. This is why, you see how taxes are just like kind of ridiculous? This is what you have to do, okay? Now, there are some limitations. Basically, there's a maximum, there's a cap to how much of your wages are taxed by Social Security. So you're not going to pay 12.4% on forever into the future. There's a cap. That's another story as well. It gets complicated. But basically, if you're just like a normal person making a normal profit that isn't like in the hundreds of thousands of dollars, you're paying 12.4% and 2.9% of that taxable business profit. So in this case, with 40 grand of profit, you owe $5,652 just of self-employment tax. This is on top of your freaking regular tax brackets. Totally unrelated. Tax brackets are one thing. This is something that comes in an entirely different way. Okay? So yes, you're going to have to pay that. That's right. And you got to make sure that you're paying these taxes quarterly and it's not just a self-employment tax. So it can get complicated. But basically, you owe $5.6 grand on $40,000 of profit. That's a pretty steep amount now, isn't it? Okay? Now, there are some other deductions that you get that are on different parts of the tax form. For example, you can deduct half of your self-employment tax to arrive at taxable income, as well as qualified business income, which is your business profit minus half of your self-employment tax, times 20%. So there's all this crap going on. It can get super complicated. Eventually you'll get it if you prepare taxes enough. But basically, just understand that you need to calculate what you think your business profit is, multiply it by 0.9235%, and then take that number and multiply it by 15.3%, and that's what your self-employment tax will probably be. And then you have to make estimated payments. So you probably should hire an accountant, okay? Because they can do the tax planning for you. But if you didn't save 5.6, if you just got 40 grand of profit, like this girl probably did, she got nuked from orbit. Okay, she got wrecked. And later on in the video, I think she says, oh, I almost had to give up on my dream and go back to work. Because imagine if you had to empty out your entire savings to pay $5,652 because you didn't plan for it properly. Okay? It's very important, but that's basically how self-employment tax works. Let me know if you have any questions in the comments below. Cheers!